3.7%. That is the budget deficit the Greek government reported in the spring of 2009. The real number, once Europe's statistical office had finished checking it, was 15.4. Not a rounding error. For times the figure, the European Commission wrote the words deliberate misreporting into an official report. Here is the part that should stop you. Nobody in Greece was ever prosecuted for producing the false numbers. One man was prosecuted for 15 years through 4 courts and 2 acquittals and a conviction in a European human rights ruling. He is the man who corrected them. So there are 2 questions in this story, and they are not the same question. The first one is mechanical, and it has an answer you can read in public documents. How does a country misstate its own deficit by 4 times inside a currency union with rules, auditors, and a statistical office, and get away with it for years? The second question is the one that stays open until the end of this video, and it is not really about Greece. If falsifying the national accounts is not a crime anybody is charged with, but correcting them is, what exactly is being punished? Because the first thing you notice when you lay the record out in order is that the machinery worked perfectly. It was not fooled. It was fed. Everything in this story was reported, filed, notified, and archived at the time. The scandal is not that somebody broke into the numbers. The scandal is that the numbers were handed over in the correct format by the correct people on the correct dates. And by the end, you will know exactly who paid for them. Start with the mechanics, because the mechanics are boring, and boring is exactly how this worked. A Eurozone country does not send Brussels a bank statement. It sends a notification, a set of tables, twice a year, saying what its deficit and its debt were. Those tables are built by the National Statistical Office, out of numbers supplied by ministries, hospitals, pension funds, state companies, and local authorities. Europe's Statistical Office, Eurostat, checks them, asks questions, and then either validates the figures or attaches a reservation. Now look at where a number can go missing. A hospital orders equipment and does not pay the bill. If nobody records that unpaid bill as a liability, the deficit does not move. A loss-making state railway is classified as a company rather than as part of the government, and its losses sit outside the accounts. A Social Security fund reports on a different basis than the ministry. Military spending is booked when the equipment is delivered rather than when it is ordered, or the other way around, depending on which produces the smaller number this year. And in 2001, Greece entered into cross-currency swaps with Goldman Sachs. Eurostat said in 2011 that Greece held 13 off-market derivative contracts with that bank and that Eurostat had not been informed of them at the time. I'm not going to give you a euro figure for how much those swaps hid, because there is no audited one. The mechanism is documented. The amount is not. None of this required a conspiracy. Every single one of those choices is an accounting judgment made by an official, written down in a file. And in January of 2010, the European Commission published a report on Greek statistics that used a phrase governments do not normally use about each other: the deliberate misreporting of figures by the Greek authorities. Not error, not disagreement, misreporting. And that same report noted this had happened before in 2004 across a list of separate issues, which tells you the machinery had already caught Greece once, and the machinery had not changed anything. In June of 2010, the Greek parliament appointed a new head of the statistical service. His name is Andreas Georgiou. He had spent about 20 years at the International Monetary Fund in Washington working on exactly this: how countries measure themselves. He took office on the 2nd of August, 2010, with a 5-year term and a rebuilt agency called Eurostat, created that year specifically to make Greek statistics independent of the government that the statistics were about. Think about what that job actually is, because it is not what most people picture. He is not an auditor sent to find the guilty. He is not a prosecutor. He is a man whose entire function is to take the numbers the state produces about itself and publish them under a rulebook written in Brussels, the European Statistics Code of Practice, regardless of what those numbers do to the government that appointed him. That is the whole point of an independent statistical office. It is also, as this story is about to demonstrate, an extremely dangerous job description. Now watch the number move, because the sequence is the story. Spring 2009. The outgoing government's forecast for that year's deficit, 3.7% of output. October 2009. A new government takes office, opens the books, and notifies Brussels of a figure in the order of 12.5%. In 1 October, the reported hole in the Greek budget more than triples. April 2010. Eurostat publishes the first actual figure rather than a forecast, 13.6%. and attaches a formal reservation, which is a statistical equivalent of publishing something while holding your nose. Then the 10th of November, 2010, the new head of Eurostat transmits the revised figures for 2006 through 2009 to Eurostat. He does it without putting them to a vote of his own board. Remember that detail. It is the entire legal case against him, and we will come back to it. 15th of November, 2010. Eurostat validates the numbers and lifts its reservation. Greece's 2009 deficit, 15.4% of output. Its debt, 126.8%, revised up from 115. And with that, the price of everything changes. Because a country's borrowing costs are set by what lenders believe about numbers exactly like these. What follows is 3 rescue programs. May 2010, 110 billion euros committed, of which about 73 billion was actually paid out. March 2012, a second program, 130 billion euros, and alongside it the largest sovereign debt restructuring in history. Private bondholders take a nominal haircut of 53.5% on roughly 206 billion euros of eligible bonds. August 2015, a third program, up to 86 billion, of which about 62 billion was drawn. Total actually dispersed across all 3, 288.7 billion euros. And the conditions attached to that money were not abstractions. In February 2012, as a prior action for the second program, the Greek minimum wage was cut by 22% from 751 euros a month to 586. For workers under 25, 32%. Now, put yourself in the chair, because this is where the story turns from accounting into something else. You run the statistical office. Your job is to publish what the data says. The data says the deficit is 15.4%. You know, because you can read a newspaper, what publishing that number will trigger. A rescue program and conditions and a decade of pain for people who never saw a notification table in their lives. You have 2 options. Publish, and be the man whose signature is on the number that justified austerity. Or do not publish, and be the man who continued exactly the practice the European Commission has just called deliberate misreporting. There is no third door. That is the whole test, and notice that it has nothing to do with courage in the dramatic sense. It is a filing decision. He publishes, and then the accusation arrives, and it is the mirror image of the crime everybody had been talking about. Not, you hid the deficit, but you inflated it. The claim, pursued through the Greek courts for years, was that the head of the statistics office had made his own country look worse than it was, and thereby handed the lenders a pretext. Indictments attached damage figures to that claim in the range of 171 to over 200 billion euros. Read that number against the total actually disbursed to Greece, 288.7 billion, and you can see the shape of what was being alleged. That the crisis was, in some meaningful part, an arithmetic error committed on purpose. This is the first chart in this video, and it is here for a reason. Everything up to now has been about a number on a form. This is what happened underneath it. This is Greek output, measured in constant dollars by the World Bank. In 2008, the Greek economy produces about $265 billion of goods and services. By 2013, it produces $193.5 billion. That is a fall of 27% in 5 years. There was no war. There was no natural disaster. There was no epidemic. This is a decade before the pandemic. For scale, the The United States, in the Great Depression from 1929 to 1933, lost about a quarter of its real output. Greece, inside the world's second-largest currency union, in peacetime, lost more than that, and then stayed down. And here is the number that matters more than the depth, because depressions end, and this one did not quite. 16 years after the peak, in 2024, Greek output is back to about 84% of where it was in 2008. Not 84% of the way through the recovery. 84% of the starting line. Per person, Greeks produced about $24,000 of output in 2007 and about $21,500 in 2024. A country does not usually get poorer over 17 years without something happening to it. And what happened to this one, on paper, was a correction to a spreadsheet. Now the trials. And I want to be precise here because this record is long and it is easy to get wrong. There were two separate tracks. The first was the serious one, the felony accusation that he had falsified the deficit upward and damaged the country. On that charge, the Greek Judicial Council threw the case out in 2015. Prosecutors brought it back. Thrown out again in May 2017. Brought back again. Thrown out a third time in March 2019, and closed with a full acquittal in April of that year, when the Supreme Court prosecutor did not object inside the statutory window. 3 acquittals on the same accusation. The second track is smaller, and it is the one that stuck. A misdemeanor, breach of duty. 3 counts. That he held a second job at the fund. That he did not convene his own board. That he transmitted the 2009 data to Eurostat without the board's approval. First instance, December 2016, acquitted on all 3. On appeal, August 2017, acquitted on 2, convicted on the 3rd, the transmission without board approval, with a 2-year suspended sentence. Greece's Supreme Court upheld that conviction in June 2018. So the settled legal position, for years, was this. Publishing the correct figure was not a crime. Publishing it without a committee vote first was. He took the case to the European Court of Human Rights. And in March 2023, the court found that Greece had violated his right to a fair trial because its Supreme Court had given no reasons for refusing to refer a question to the European Court of Justice, and the domestic proceedings had to be reopened. Greece's paper of record reported in August of this year that the top court finally acquitted him outright, 15 years after he took the job. I will flag that last step honestly. I found it in one outlet, not several. There was also, separately, a defamation conviction in 2016 over statements about a former colleague, with a 1-year suspended sentence upheld on appeal. And through all of it, the institutions on the other side of those notification tables kept saying the same thing. Eurostat stated publicly that it had published Greek data without reservation for 5 consecutive notifications, and that it refuted the allegation that the 2009 deficit had been overestimated. The International Statistical Institute said he had acted in complete compliance with the European Statistics Code of Practice. The president of the Eurogroup called the convictions damaging to the reputation of Greek statistics. Meanwhile, the bill was being paid by people whose names appear in no notification table at all. This is Greek unemployment from the World Bank. In 2008, 7.7% of the Greek labor force is out of work, an ordinary European number, unremarkable. By 2013, it is 27.7%, more than 1 in 4. For Greeks under 25, in that same year, 58.5%. Not 58% unemployment among young people who wanted a career they liked. 58% of the ones looking for any job at all. And people did what people do. The Bank of Greece counted about 427,000 residents who left the country permanently between 2008 and 2013, roughly half of them between 25 and 39 years old. The population of Greece in 2010 was 11.12 million. In 2024, it is 10.41 million. 716,000 fewer people. A country the size of Greece lost, in headcount, something close to the population of its second city. There is a public health literature on this too, and I will give you the honest version rather than the dramatic one. Peer-reviewed studies looking at Greek suicide data across the crisis find increases in the order of 33 to 40%, depending on the period and the method. One widely cited study in the British Medical Journal's Open series puts the rise at about 35% between 2010 and 2012. Those are small absolute numbers in a country with historically the lowest suicide rate in Europe. They're also a real signal in the same direction in every study I could find. So let's put the two ledgers side by side, because this is the reversal the whole episode has been walking toward. On one side, the misreporting, named as deliberate in an official European Commission document in January 2010, documented as having happened before in 2004. The European Statistical Governance Advisory Board, the body whose job is to watch exactly this, recorded that no legal action had been taken by the Greek government to bring to account those responsible for the misreporting during either period. Nobody charged, nobody tried, nobody convicted. On the other side, one man, 15 years, 3 acquittals on the felony, 1 conviction on a procedural count, a European human rights judgment, and a final acquittal reported this August. And that asymmetry is not a loophole, is not a scandal in the sense of somebody having done something sneaky in the dark. It is the correct output of the system as it is built. Producing a false number is a political act, and political acts are answered politically, with an election, or a resignation, or a report. Transmitting a true number without the right committee minute is a procedural act, and procedural acts are answered legally, because procedure is the part that is written down in a statute. If you go looking for the crime in this story, you will find one. It is just not the one you came for. And now the part that comes after the ending, because the biggest number in this story is not 15.4%, and it is not 288 billion euros either. This is Greek government debt as a share of the economy from the International Monetary Fund. In 2007, before any of this, 104.6%. Already high. Nobody was in the streets about it. 2009, the year of the restated deficit, 128.5. 2013, after the largest sovereign debt restructuring in history, wiped roughly 107 billion euros off the stock, 180.5%. Read those two facts against each other slowly. Private creditors took a 53.5% haircut. Nearly 200 billion euros of bonds were exchanged. 288.7 billion euros were disbursed in rescue loans. And the debt ratio went up by 76 points. Not because the arithmetic failed, because the denominator collapsed. Debt is a fraction. The top of it fell, and the bottom of it, the economy, fell faster. Today the ratio is 155.4%. Below the peak, above 2009, above 2007, above where the whole story started. Which means the honest summary of 15 years is this. The number was corrected, the money arrived, the wages were cut, 700,000 people left, and the debt burden that all of it was for is heavier than the day the misreporting was discovered. So the two questions. The mechanical one is answered, and the answer is duller than the myth. A country misstates its deficit by 4 times not by breaking into a computer, but by making a long series of small, defensible-looking accounting choices, which unpaid bill counts, which state company sits inside the government, which contract gets described as a swap, and then submitting them on the correct form, on time, to an office that can only check what is given. The system did not fail to catch it. The system caught it twice, in 2004 and again in 2009, and both times the catching changed nothing, because catching is not the same as consequences. And the second question, the one left open at the start, if falsifying the accounts is answered with a report, and correcting them is answered with 15 years of criminal courts, what is actually being protected? Not the truth of the numbers. Eurostat has said, repeatedly and in writing, that the corrected numbers were right. What was being protected was the account of the crisis that made it somebody else's fault. Because if the deficit really was 15.4%, then the decade that followed was the price of something Greeks were told about far too late by their own government. And if the deficit had been exaggerated by a statistician, then the same decade was something done to Greece from outside. One of those stories is available to any politician who wants it. The other one is a spreadsheet. And this is why the shape of it should feel familiar, even if you have never thought about Greece for a day in your life. Every institution you rely on runs on numbers that somebody inside it is responsible for producing. The inflation rate that sets your wage negotiation, the crime figures that decide where police go, the waiting lists that rank your hospital, the emissions your car is certified at. In every one of those systems, there is a person whose only job is to write down what is true, and whose reward for doing it is that nothing happens to them. That is the deal. And this story is what it looks like when the deal breaks. Not with a cover-up, but with a courtroom. So here's the question I would actually like answered, and I do not think it has one clean answer. If you ran a statistical office and you knew from this case exactly what publishing the true number could cost you personally, would you still send it on the 10th of November without waiting for the committee?